And welcome back to the Emmy Award-winning Forbes Sports Money. Time for our State of Sports discussion brought to you by SAP. And we are joined once again by friend of the show, Rob Tillis. Good to see you. We're going to talk about the impending auction of AEG. Is it safe to say that this is going to be the biggest deal ever?
The largest sports deal and most complicated sports deal ever.
Billions and billions of dollars. What fabulous prizes do they get, the winning bidder, Michael?
Well, the way you're looking at this deal is I was talking with someone, Bob, who's very familiar with AEG's books. They have firsthand knowledge of the company's books and as well as what the assets are going to be valued at. And they're basically breaking it up for potential buyers into three groups. Number one are the venues, right? You got LA Live, you have O2 in London, and you have O2 in Berlin. Those are the three main areas of buildings that they have that they pump sporting events and concerts into. That is 60% of the value. 25% of the value is the sports teams. You're looking at the Lakers. You're talking about the LA Kings that just won the Stanley Cup. There's a couple of MLS franchises as well. And 15% is what they call their growth businesses, their new businesses, primarily their ticketing business and the potential to get a football team on the real estate they own in LA. Altogether, the valuation they're saying is between $8 to $10 billion.
All right, so Rob, you talked about it being complicated. Is that just because it's not for a piece of one sports team or one enterprise? It's for all of these different things.
Well, I would say that's a mouthful by Mike to start with. So there's a lot in there. So if you go through each one of those pieces, a large real estate deal like that where you own multiple arenas across different geographies, different continents, different parts of the world, very complex in terms of what the individual lease agreements are with each one of those buildings and how they're programming those buildings. Then there's all the ancillary real estate around those buildings, including places like LA Live at the Staples Center. Then when you move over, you have to evaluate a non-controlling position in the Lakers and control positions in some of these other teams. Those have some different impacts to it. And then the third piece on the growth and content business, from the concert business to the ticketing business, those are growth businesses, but there's a lot of competition in that space with the likes of Live Nation and others.
And how likely is it that one individual is going to buy this? I mean, it's a fortune, whether or not it goes for $8 billion or $10 billion, something in between. I mean, are we looking at something more similar to the Dodgers, where you had Guggenheim come in with institutional money and then bring in a bunch of other investors as well?
When you get to a deal of this magnitude, you're going to see lots of interest from lots of different areas. So I think there'll be the high net worth group that'll be interested, and some of those people have come forward. You'll have the institutional money from the private equity funds around the world. And then the third category is the sovereign wealth funds. I think will also be active here from the Middle East and Asia, because it's such a high-profile asset with a lot of assets in Los Angeles. So I think what's going to happen is there'll be a lot of individual bidders, and then there will be a group that sort of gets pulled together as the bidding starts.
It doesn't sound like some of those entities would necessarily be ready to take over both sports and entertainment. Is that fair to say?
Yeah, although the package does really work together, because there's a lot of programming that's tied to the arenas that includes the teams. When you're talking about the arenas, then it's the ancillary real estate, and with the concert and the promotion business, they're also using that for their arenas. So I do think that as a package, it does make some sense.
And, you know, by the way, guys, the NFL has not said it's definitely putting a football team in Los Angeles anytime soon. If you're buying this package, do you come in saying, I'm not going to do this unless I know I'm going to get a football team there to generate some revenue?
Yeah, I don't think that's going to be an option. I think you're going to have to do your analysis based on following through on the option to bring the NFL to Los Angeles and really evaluate what the lease looks like at Farmers Field, what the environmental impact report looks like, and really do your own due diligence. But I do think it's a critical part of the deal for Mr. Anschutz in thinking about his legacy.
Well, he's got a green lit to this point. He's got money from farmers to commit to a stadium, naming rights. Yeah, it's that land right next to Staples Center, so it really seems to work. But you're talking about coming in, writing a check for $8 to $10 billion, and then the new owner's going to have to write a check for a team, write a check. That's going to happen.
Yeah, so in Los Angeles, the availability of municipal financing is very limited to non-existent, so you will have to privately finance the stadium. We've had some experience in looking at that. The issue will be then, if you privately finance a stadium, how much can you sell your suites and your club seats and all your premium, your advertising, additional sponsorship beyond Farmers, and does that model then support a privately built stadium? And then, as you're saying, Bob, on top of that, Are you going to relocate a team, or is it going to be an expansion team? What type of capital do you need to bring a team to Los Angeles?
And Anschutz has built this up over many years. So, and it's the only really business like this in the world. There's nothing as big as this, with as many venues, with as many teams in as many parts of the world. They've been largely successful at cross-selling sponsorships into multiple venues, booking acts and so forth. If I'm a buyer, am I saying, you know what, $8 billion might be a little bit above what the cash flow or revenues might support, but you know what, if I ever want to build something like this, if this is where I think the future is going to be, it might be worth it, because the cost to build it today would be so much more.
Yeah, it's an interesting thought. I think in terms of, if you look back on where the value of sports content has been and the growth over the last, say, 15 to 20 years, it would support that argument that the content and the program should continue to grow over the next 10 to 20 years. So, and they are hard to replicate. You got cities like London and Berlin and Los Angeles that they are owning major venues in. So I think there is some support to that argument. The question is going to be, what type of multiple do you need to pay on that existing cash flow, and then measure that against that growth?
It sounds like somebody, whoever buys this, is going to really have to be invested in it more than just their money, that they really want to make this happen and grow. And even if in the end the NFL's not an option, they've got to turn this into what is generating money now, has to generate even more.
That's a good point. I think the reason that this is such a complex transaction is their business operations are really, truly global. So this isn't just running one sports team in a local market. You have to run, multiple sports teams in various cities, control different buildings. You have some geographies that some folks may not be as familiar with. So I think ultimately what will happen is you'll have a consortium that comes together that can really, truly actively manage the whole company.
Why sell now?
It's a good question. I don't know the exact answer to that question, but I would surmise that he's sort of built this and gotten it to a place now where it is ready to get to the next level, and maybe he doesn't have the continued commitment to this, as well as trying to bring the NFL to LA, which is a huge project in its own right. So he probably looked at the state of the market and multiples and some of the recent deals and said, now's a good time.
Could we see what with AEG, what happened with the Dodgers, where we were all thinking it went to auction, it'd be $1 billion, $1.2 billion, and then boom, suddenly out of nowhere, there's a $2 billion bid.
Yeah, I think this will be a fairly frothy auction. It's being run by my college roommate, Peter Cohen, who I think has been a visitor on your show from Blackstone. And I do think there will be a lot of interest in this, because there are not that many content plays where you can get a lot of this content and this type of a network of assets all together, all in one shot.